Hey guys, welcome to our 6th Dividend Portfolio update. It's been another 5 weeks since the last update, and our portfolio has changed a lot in the last few weeks. We transferred one of our growth portfolios into the Fire Fund account, so we have a big spike in portfolio value. And we're doubling down on our investment strategy by increasing our weekly investments into this account by 50%. So if you're ready to check it all out, let's jump right in. On this channel, I talk about all things finance, wealth building, and how you can achieve the life of your dreams through financial independence. If you want to join me on this journey to financial independence, go ahead and hit that subscribe button. Okay, first let's take a look at the portfolio's value changes in the last few weeks. Like I mentioned earlier, we transferred one of our growth accounts into this one to consolidate everything and get a better idea of where we are in our journey. The growth account did include a good number of dividend growth companies that generate some income for us as well. But we were blind to it because it was all sitting in a growth account that I left alone and did not monitor. Now that it's all consolidated, we have a clearer picture of our assets and the income it generates. The transferred account was valued right around $40,000, so that's why our account value jumped so significantly over the last few weeks. So if we subtracted that amount, we can see that our account value actually increased by $3,821. And with the state of the market over the last month, I'm pretty sure that increase is due to my own weekly contributions. After that, we can see that our dividend yield in the portfolio also decreased by almost 0.5% from 4.13% to 3.69%. This was expected because the large amount of stock that was transferred into this account offers 0% dividend yield, since they were pure growth plays. An increase in account value while adding 0 additional dividend yield decreases the overall account yield. But that's okay because we did not lose any dividend income through this. The consolidation did bring in some dividend growth companies into the Fire Fund, so we did see a large increase in our annual income as well. I do want to mention that RYLD paid an unusually large dividend from its end of year asset rebalancing, so our dividend tracker site is calculating RYLD with a 15% dividend yield, which is not accurate, and I believe it has inflated our annual dividend income number here. I am hoping the calculation will return to normal after next month's dividend payment, but if RYLD really is paying out 15% annually now, I'm actually okay with that. I'll just need to adjust some of my calculations. So according to our dividend tracker, our annual dividend income increased by $1,297. That is an incredibly large jump that I'm not sure is accurate due to the RYLD calculation issue I just mentioned. My personal calculations puts us closer to $3,900 annually instead of $4,300. But I will go with the dividend tracker number for now since I have no way to adjust the calculation manually on this site. Now let's look at our account growth over the last few months. We have been tracking this portfolio for about 6 months now. For the account value, we were sitting at $57,000 back in August, and now after consolidating my accounts and investing all my paychecks into this account, it's sitting at $116,000. The Fire Fund will be the key to my financial independence, so I've doubled down on my investment strategy and I'm putting everything I have into building this account. In the middle box, we can see our monthly dividend payment growth over time. Back in August, we got paid $83 in dividend income, and just 6 months later, we got paid over $300 this month. It was a steady growth for the first few months, but within the last 2 months or so, we have seen some pretty big jumps. If we can continue at this current rate of growth, our Fire Fund will fully replace my lost rental property income within the next 6 months. Lastly, we can see our annual dividend income has more than doubled within the last 6 months, from $1,600 annually to over $4,000 annually. We are about 1/3 of the way there to our goal of $12,000 per year of annual dividend income. Let's see if we can get to $8,000 annually by the end of this year. When I started this Fire Fund a year ago, months before I even thought about documenting this journey on YouTube, I knew that this would be a multi-year plan. It took us 12 months to get where we are now. I'm really excited to see where we will be 12 months from now. Moving on, let's take a look at the stock purchases and sales I made in the last month. I only made 2 sales since the last update because I felt I was too heavily invested in SPHD. I sold 50 shares for $43.95 per share, which resulted in a profit of $174, and we pulled out about $2,200 from that trade. As always, my timing is so great that the stock has increased in value by 6% since I sold it. But that's okay. We sold for a profit and reinvested those funds back into the portfolio into higher yielding positions. Then I sold out of my small position of Walmart. I only had 2 shares, but I did make a very small profit and got back $280 to reinvest elsewhere. That's it for the sales. Let's check out all the purchases we've made in the last few weeks. It's actually a lot more than I thought, but we did have over $2,400 to reinvest from our sales. Starting from the top down, we have QYLD. I spent $2,900 on 131 shares of this stock, bringing the total in the portfolio up to 279 shares. For the new year, I decided to double down on my quad factor strategy, so you guys will see a lot more of QYLD and RYLD. Speaking of RYLD, I actually spent $2,700 to pick up 112 shares, bringing the total in the portfolio up to 277. We have seen a very shaky market the last month and a half, and these two have kept dropping below my cost basis, so I've actually seen it as a great time to buy. But make sure you don't use up all your cash reserves at once. Dollar cost averaging is the way to do it. The market craziness will outlast anyone's cash reserves, so make sure to be patient. Below that, we have CIM. I spent $640 on 42 shares of this stock. I actually got my first quarterly dividend payment from the stock last month, and it was okay. I think I'm going to stop here at 142 shares and start buying other stocks. After that, we have NUSI. It dropped far enough below my cost basis to want to start picking up a few shares, but I honestly do not like this stock anymore. I rounded out my position by picking up 18 shares for about $500. I'm pretty sure the 120 shares will not generate enough dividends every month to purchase an additional share on its own, but I don't want to actively invest any more money into the stock, so I'll just let it ride. Then we have Horizon Technologies. I also decided to finish up this position. I spent $200 on 13 shares, bringing the total in the portfolio up to 183 shares, which is more than enough for it to purchase 1 share per month on its own. Moving on, we have SPYG and QYLG. I am replacing SPYG with QYLG as the growth ETF of choice for my portfolio going forward. QYLG gives me all the benefits of owning QYLD, like its 10% dividend yield, but with some growth of SPYG at half the cost of SPYG. I plan on buying about 6 shares of QYLG a week going forward, but as growth stocks continue to melt down, I may see a large buying opportunity come up. So these last few weeks I rounded out my position in SPYG by spending $840 on 12 shares, bringing the total in the portfolio up to 87, and I may buy a few more shares to finish up the position at around 100 shares if the stock continues to drop. After that, I started my position in QYLG with 11 shares for about $340. These two last additions was purely from dividend reinvestments. DIV and SRET are snowballing quite nicely on its own right now. So in total, I invested $8,166.95 in the last 5 weeks. But keep in mind, $2,400 of that was reinvested capital from our stock sales. If you guys don't want to have to wait a month for a portfolio update, make sure to join me every Friday when I release my Fire Fund Friday videos, where I walk through the markets for the week and all the purchases with some extra details. Okay guys, now let's finish up this update with a quick dive into the dividend portfolio to see my top 8 income generating assets. At the top, we have RYLD. Like I said earlier, I don't believe the annual dividend percentage is correct at 15% because this latest dividend payment was so large, it skewed the annual percentage. I think it will be corrected by the next dividend payment date though. But if it is correct, I'm okay with that because this position is going to be generating about $1,000 annually. This stock is a major component of my quad factor strategy, and I do plan on building this position to generate over $15,000 per year of annual dividend income. Below that, we can see that QYLD has finally overtaken DIV for the number 2 spot on this list, now generating over $700 annually. This stock and RYLD should own the top spots on the list going forward. If I can get both of these stocks to generate $15,000 annually, then I will have officially achieved financial independence. And in the third spot, we have DIV. It is still slowly snowballing on its own with the dividends purchasing just over 2 shares every month, and is currently generating $506 annually. This number keeps on increasing every single month. It will take some time before anything can knock this stock off the top 8. Then we have NUSI, which is generating about $260 annually. Now that I've stopped purchasing this stock, I'm pretty sure it will slowly fade off the list. Below that we have SRET, which along with DIV was one of the larger holdings in my portfolio. This stock's value does not change much, but the monthly dividends are enough for it to purchase 2 shares on its own every month. The current annual dividend generated is about $230 annually, and it continues to increase monthly as well. Then we have Horizon Technologies. I just finished up this position at 180 shares so that it would pay enough dividends every month to purchase an extra share on its own. This position generates about $220 annually at the moment. Below that we have a new addition to the top 8, Starbucks. I actually had 60 shares of this company in my growth portfolio, and now the total is at 97 shares, which generates us about $190 annually. This is one of our dividend growth stocks, but I don't think it will be on this list for long. And lastly we have CIM. Just like Horizon Technologies, I finished up this position at 142 shares, which generates $187 annually. This stock does pay quarterly, and I currently have enough shares so that it purchases about 3 shares per quarter, which averages out to 1 share per month. I also think this will drop off the list soon. Last month, I set a goal to increase our dividend yield to 4.5% and an annual dividend income of $3,400. We were able to hit one of those goals through an unexpected account consolidation. Let's see if we can get back to our 4% portfolio dividend yield by the next month's update. And that's it for this month's dividend portfolio update. We now have a 6-figure dividend portfolio, and it feels good. We are making great progress toward our overall goal, and I'm excited to see where we will be next month. If you guys have any questions or stock recommendations, please let me know in the comments below. Otherwise, thanks for checking out the video, and if you enjoyed it, please consider hitting that like and subscribe button. It really helps out the channel. And as always, thanks for watching, and I'll see you guys on the next one.